Norway has a really good economy that many people, including economists and politicians, admire. It's a small country with about 5.5 million people, and they were already super rich before finding a huge amount of phosphate in July. It is a rare and valuable resource that could even make Norway the richest place on Earth, beating even really rich places like Monaco or Liechtenstein. But will this actually happen? On the other hand, some countries heavily rely on exporting this material, and the surplus from Norway could negatively impact them. So, how is Norway going to manage this new influx of wealth? How could this discovery be a miracle for an economy? And finally, what impact will this tiny country's decisions have on the most important areas of the global economy? Norway's economy is remarkable, but rapid economic growth can lead to long-term problems. Norway was not a wealthy economy before the 1970s. It relied mostly on fishing. In the late 1960s, the country discovered oil and natural gas deposits in the North Sea. This discovery led to significant production under Statoil. Statoil is a company created by the Norwegian government for the purposes of extracting, refining, and selling the oil reserves that were discovered years earlier. Norway allowed private companies to explore for oil and gas, but required the state to have 50% participation in every production license sold. This ensured that the profits from the country's natural resources went to its people. The balanced approach made Norway popular for oil investments. Statoil, now known as Equinor, diversified its business by investing in refineries to process fossil fuels. It also allows for direct sales to consumers in Europe. This strategy is successful, and today Norway imports even more crude petroleum due to the efficiency and management of facilities in countries like Sweden and Russia. Norway has historically kept a high share of revenues from natural resources for itself and its people, unlike many other countries where most of the money goes to benefit natural resource companies. This is due in part to Norway's NATO membership and lack of geopolitical struggles. Despite having a small population, the revenue generated from natural resources in Norway is immense. Natural resource revenues should be managed responsibly to build a successful economy. Norway had advantages in managing their oil resources due to their powerful democracy and capital to create their own extraction infrastructure. However, many other advanced and democratic countries have been bullied by resource companies into giving away more than a fair share of their natural wealth. It is important to ensure that natural resource revenues benefit the people and are not wasted. Countries around the world have employed various strategies to ensure their revenues genuinely improve their economy. Venezuela initially turned a lot of its oil revenues over to its people through social programs and low taxes, but this created an unstable political race. Alaska pays its residents a share of oil revenues every year and levies no state income taxes, but it didn't radically reshape its already wealthy and politically stable economy like in Venezuela. Many countries have used oil revenues to fund development projects. They have the goal of boosting tourism and international business. However, transparency issues have arisen in some cases, making it difficult to tell if leaders are investing in sports teams for long-term benefits or personal preference. This strategy also has the problem of just shifting natural resource benefits away from foreign oil companies and to any type of company, because a key part of the development strategies of places like the UAE, Qatar, and Saudi Arabia has been very low or zero taxes on businesses and individuals. Many countries offer low taxes to attract businesses, but it is uncertain if these countries can sustain this model once oil revenues run out. Norway takes a different approach with high taxes on businesses, individuals, and economic activities. Even high earners can end up paying over half of their income to the government after including regional taxes and other levies. Norway also has one of the highest rates of value-added tax in the world, but it's unclear where all the money is going. Norwegian cities may not be flashy, but that's because the country invests heavily in a national savings account called a sovereign wealth fund. Today, the government pension fund of Norway is worth over $1.6 trillion, making Norwegians some of the wealthiest people on the planet. The fund is not directly handed over to citizens, but rather used to fund public spending. The importance of the fund lies in its name: sovereign wealth. Norway's pension fund, technically called the state's pension fund, it is not only for funding pensions, but also acts as a pension for the country when it can no longer rely on oil revenues. By investing in the fund, the country will make more money than if it had spent its oil revenues directly. The fund also provides stability to the economy by acting as a shock absorber to wild swings in international markets. If oil prices are high and the country makes lots of revenues, it can put money into this fund. Such a country can become independent of oil revenues in the future. The fund can also be used to pay for services in case of low oil prices without taking on debt. The country has high tax rates which contribute to economic stability by controlling the economy. Lowering taxes can help boost the economy and raise employment, while raising taxes can address issues like inflation and inequality. When a government doesn't rely on taxes to fund its expenses, it loses an important means of control. Taxes also create a social contract between the government and its people. Moreover, they encourage greater scrutiny of how tax dollars are spent. While Norway's successful strategy in capitalizing on natural resource wealth is admirable, it may not be easily replicable in other countries. Norway's management of its newfound wealth provides a clear example of this. Norway's discovery of phosphate reserves has the potential to make North Sea oil and natural gas insignificant. These reserves are worth more than Saudi Arabia's oil reserves. Norway would be one of 2 countries in the world to control the supply of phosphate, making it a valuable market player. Demand for phosphate is expected to grow as it is used in the same products that the world is shifting to as an alternative to oil. Phosphate is a valuable resource used in various industries and as a fertilizer to feed the world's population. Previously, Morocco was the only country with a significant supply, making it a target for major powers like the EU, the USA, and China. These countries classify phosphate as a strategically important material. It means that it can only be traded with certain restrictions similar to rare earth metals and uranium. Norway's recent discovery of a highly coveted resource has piqued the interest of major economic powers worldwide. While this presents opportunities for Norway and businesses seeking a more consistent supply, it poses a potential risk to Morocco, which heavily relies on the export and processing of this material. The revenues from the extraction of this resource will likely be directed into the government pension fund, which could triple its value over the coming decade. Norway is not a member of the EU, but its discovery is going to become an interest for most of the major economic powers in the world, along with a potential risk. The country is obviously worse for Morocco, as almost 25% of its total economic activity and international trade was centered around the export and processing of this material. If Norway starts to extract and sell this material in bulk, it will inevitably drive prices down in international markets and offer a more stable and business-friendly alternative to countries and companies. This is great for Norway and the world, but that all unfortunately comes at the expense of Morocco. The revenues from the extraction of this resource will likely also be directed into the government pension fund, which means every single Norwegian citizen would have $1 million. Norway, alongside the other Scandinavian countries, infamously have a very egalitarian culture that has in a lot of ways permeated into their economic systems. A lot of the economists and commentators will point out that Norway technically does not have a mandated minimum wage, but that's only because workers' unions in the country are incredibly strong, and almost every worker earns a relatively high wage. The trade-off to that is that highly skilled workers don't earn very much compared to what they could make in other Western European countries, and especially in the USA, and that difference becomes even larger when considering taxes, which are higher in Norway. Comment down your views about the economy of Norway, like and share this video, and subscribe to our channel. Also, remember to turn on your notification bell so that you never miss any upload. Thank you for watching.